Well, you know what I think about these numbers. I think they're all bogus because they're just made up, right? I mean, they're all the birth-death ratio. They've all got these seasonal adjustments. I said, what's really important to me is what they revised last month and the previous 2 months, because no one looks at the revisions. They only talk about the number. And so I think if you go back and you look like over the last year, it was like a third of the reported jobs vanished in the revisions. So they weren't really there. I mean, it's like a tree falling in the forest. If there's no one there to hear it, it didn't happen. If the job really didn't exist just because you said it did, it's like when you put a big number on the first estimate of GDP and then you revise it down, like, well, it was never the high number. It's the actual number. Or if you go the other way, right? If you do, small and you build up.
The Federal Reserve on Wednesday again held benchmark interest rates steady amid a backdrop of a growing economy and labor market and inflation that is still well above the central bank's target. In a widely expected move, the Fed's rate-setting group unanimously agreed to hold the key federal funds rate in a target range between 5.25% to 5.5%, where it has been since July. This was the second consecutive meeting that the Federal Open Market Committee chose to hold, following a string of 11 rate hikes, including 4 in 2023. The decision included an upgrade to the committee's general assessment of the economy. Stocks rallied on the news, with the Dow Jones Industrial Average gaining 212 points in the session. The process of getting inflation sustainably down to 2% has a long way to go, Fed Chair Jerome Powell said in remarks at a news conference. He stressed that the central bank hasn't made any decisions yet for its December meeting, saying that the committee will always do what it thinks is appropriate at the time. In this video, we are going to jump into a deep dive with Mark Yusko regarding the Fed, the job numbers, and the labor market as a whole. He also sheds light on the banks and technological evolution, where he points out that Bitcoin may be slightly overhyped for now. Well, let us now get into the video. Make sure to hit the like button, subscribe, and drop your comments below.
The thing that I think is interesting is we created QE. When I say we, meaning they, so they, the Fed. And, God, we all know, well, maybe we don't all know, but the Fed was created to support the banks, right? It's a private corporation that supports its members, which happen to be the banks. And that's what central banks do. And they're the lender of last resort to those banks to make sure that they can maximize their profits. And when they cut interest rates to zero and started buying bonds, what were they doing? They were essentially bailing out the banking mistakes of the global financial crisis, right? The banks vaporized their balance sheets, right? Totally destroyed their balance sheets by over-levering. And again, leverage is just a tool. It's not inherently evil. But as the great Howard Marks says so eloquently, leverage can never make a bad investment good. Can't, right? It can, and often does, unfortunately, make a good investment bad because you're forced to sell at the wrong time and your equity disappears. So like if you buy a house for cash and the price goes up 10%, you make 10%. That price goes down 10%, you lose 10%. But no one can take it from you because there's no liability. It's yours. If you buy for 20% down, 80% mortgage, 4-to-1 leverage, and the price goes up 10%, you don't make 10%, you make 50%. I love leverage. So let's do 10-to-1. Let's put 10% down. Price goes up 10%. I made 100% on my equity. The price goes down 10%. All your equity vanishes. All of it. So all of the bank equity vanished. I mean, I think I've told the story on the show. I was with Chase Coleman in 2009, early 2009, right when QE started. And he crushed it in 2007, 2008. He short all the banks, short the financial companies, tonned it. I mean, the markets were down 52% peak to trough. They were up well over that. But in 2009, market took off after Obama said, hey, buy stocks. We got your back on March 9th, 2009. And by this time, November of 2009, Chase was down like 10% and the market was up like 20%. And I walked in his office and he literally throws this thing at me. He said, look at this. Like, what is it, Chase? I mean, okay. He says, that's Citigroup's balance sheet. They are bankrupt. Their liabilities exceed their assets. There's no way this stock should have any value. I've been short. I shorted it from $100 down to $1. Now it's $5. He said, and then it hit me. It's inconvenient for too many people for Citigroup to go to zero. And he said, I'm not shorting banks anymore. And that epiphany, right, that they weren't going to let those banks go, right? There was no chance Goldman Sachs was going away. Now, Lehman, he could let that go because they didn't like the guy who ran it at all. Like, they really just didn't like him. Bear Stearns, they didn't like the way they were scalping arbitraging certain markets. And the big guys were like, yeah, we could get rid of them. And then we would make all the money. So let them go.
Wednesday's decision to stay put comes with inflation slowing from its rapid pace of 2022 and a labor market that has been surprisingly resilient despite all the interest rate hikes. The increases have been targeted at easing economic growth and bringing a supply and demand mismatch in the labor market back into balance. There were 1.5 available jobs for every available worker in September, according to Labor Department data released earlier Wednesday. Core inflation is currently running at 3.7% on an annual basis, according to the latest personal consumption expenditures price index reading, which the Fed favors as an indicator for prices. While that has decreased steadily this year, it is well above the Fed's 2% annual target. Let us now hear what Mark Yusko has to say about technology, blockchain, and Bitcoin. Sit tight.
Look, the thing about this technology is it's unique, right? We've never had this before. We've never had a technology that you can own directly, right? You can't own electricity. You can't own TCP/IP. You can't own, all kinds of technological innovation over the years. And you can own companies that do things with it. You can own apps that sit on top and use TCP/IP. But now you can actually own the blockchains themselves. And that's pretty interesting. Now you can say, well, they're like companies, but without humans and without boards and without, so fine, you could say that. I mean, as opposed to just a pure technology, but really it's a technology. And look, I am struggling a lot with, I'll make the maxis happy for a second, with this idea that Bitcoin could become the global settlement layer for all assets in the world. It's actually, I'm coming around to the idea that it's actually possible. That not just it's a better form of money. It is, right? Digital gold. It is a better form of money. But it actually, my on-chain monkeys guys have settled multiple projects onto the Bitcoin blockchain, like valuable assets, whether it's the original, Genesis monkeys, or whether it's this Dimensions 3-dimensional mint they did, or whether it's the Bugatti eggs, right? These are $200,000 collectibles that, are settling straight to Bitcoin. And if you think about this whole decision, if you have an asset, whatever that asset is, title to a house or a stock certificate or, money, you probably feel pretty, you want to hold on to it, right? You want it someplace safe. And what did that mean in the old days? Bank vaults, like big buildings with columns and thick walls and multiple locks. And you put it in there and you had a key to your safe deposit box and it was safe until the bad guys came in and cracked the safe and stole all the stuff. So then we figure out this DTCC thing and this digital thing or this electronic thing. And so we have electronic, but stuff still gets stolen. Well, now we have digital, which is an enhancement over electronic, which is an enhancement over analog. And there's these different mechanisms for asserting proof of work, proof of stake, proof of history, proof of whatever. Proof of work is superior from a safety and security perspective, at least for me. right? Just based on the power of the network and the amount of compute. And that's the other thing is, the longer you're around this, the more you realize it isn't about speculating on tokens. I mean, that's fine and it's fun maybe, but it's about understanding the technology, the base technology, and how it's being integrated in this giant S curve. Right, we're 10% in to adoption, which means got somewhere between 10 and 20% adoption, depending on what project you're looking at. We got the whole upside of the S curve to go, and it's that technological evolution and adoption cycle that's really unbelievable. That's why I'm out here in California at 5 a.m, talking on the tube.
Top oil exporters Saudi Arabia and Russia confirmed on Sunday they would continue with their additional voluntary oil output cuts until the end of the year as concerns over demand and economic growth continue to weigh on crude markets. Both countries said their cuts would be reviewed next month to consider extending, deepening, or increasing them. Saudi Arabia confirmed it would continue with its additional voluntary cut of 1 million barrels per day, translating into a production of around 9 million barrels per day for December, a source at the Ministry of Energy said in a statement. This additional voluntary cut comes to reinforce the precautionary efforts made by OPEC Plus countries to support the stability and balance of oil markets, the source was quoted as saying in the statement. Following the Saudi statement, Moscow also announced it would continue its additional voluntary supply cut of 300,000 barrels per day from its crude oil and petroleum product exports until the end of December. OPEC Plus, which comprises the countries of the Organization of the Petroleum Exporting Countries, OPEC, and leading allies including Russia, has been cutting output since last year in what it says is preemptive action to maintain market stability. Oil hit a 2023 high in September at nearly $98 a barrel for Brent crude, although it has since weakened to trade at around $85 a barrel on Friday despite support from the conflict in the Middle East. Saudi Arabia, OPEC's de facto leader, first made the voluntary cut for July as an addition to a broad supply-limiting deal first agreed by some members of OPEC Plus in April. The kingdom said in September it would extend its additional voluntary cut until the end of the year and review the decision monthly. Analysts had widely expected the kingdom to confirm it would extend its cut in December. A June decision by OPEC Plus already limits supply into 2024. The alliance is next, due to meet on November 26 in Vienna. Do you think the oil output cuts will continue for a longer time, or are we going to be seeing the end of it soon? Let us know your thoughts in the comment section below. Also, don't forget to hit the like button, subscribe, and turn on notifications. Thanks for watching.